How to use volume at key levels in forex trading. Using volume at key levels can provide valuable insights into market dynamics and potential trading opportunities. Here are some ways to incorporate volume analysis at key levels in your trading. 1. Confirm support and resistance levels. Volume can help validate the significance of support and resistance levels. Higher volume near these levels suggests increased market participation and potentially stronger buying or selling pressure. If price approaches a key level accompanied by high volume, it may indicate a higher probability of a significant price reaction or breakout. 2. Identify breakouts and breakdowns. Volume can be useful in confirming breakouts or breakdowns of key levels. When a price breaks above a resistance level with above-average volume, it suggests strong buying interest and the potential for a sustained upward move. Conversely, a breakdown below a support level with high volume suggests strong selling pressure and the potential for further downward movement. 3. Analyze volume patterns. Pay attention to volume patterns around key levels. For example, a gradual decrease in volume as price approaches a resistance level may indicate waning buying interest, potentially signaling a potential reversal or a failed breakout attempt. Similarly, a sudden surge in volume near a support level could indicate increased selling pressure and the potential for a breakdown. 4. Divergence with price. Observe volume divergences with price at key levels. For instance, if price is making higher highs but volume is decreasing or vice versa, it could suggest a weakening trend or potential reversal. This divergence can provide insights into shifts in market sentiment and help traders anticipate potential turning points. 5. Use volume indicators. Consider using volume-based indicators such as the on-balance volume OBV, volume-weighted average price VWAP, or accumulation distribution indicators. These indicators incorporate volume data to provide additional insights into buying and selling pressure. They can help confirm price movements at key levels and identify potential trend reversals or continuations. 6. Compare volume across time frames. Analyzing volume across different time frames can provide a broader perspective. For example, if a key level is accompanied by high volume on a daily chart and also exhibits significant volume on a lower time frame, it adds weight to the level's importance and potential trading opportunities. 7. Combine with other technical analysis tools. Volume analysis works best when combined with other technical analysis tools. Consider integrating it with support and resistance levels, trend lines, chart patterns, and other indicators to enhance your trading decisions. The convergence of multiple factors, including volume, can provide stronger confirmation and increase the reliability of your trading signals. Remember that volume analysis in forex trading can be challenging as the forex market is decentralized, and volume data is not as readily available as in other markets. It's important to use volume analysis as a supplementary tool and focus on liquid currency pairs with reliable volume data from reputable sources. Additionally, practice and observe volume patterns and their relationship with price action over time to gain familiarity and improve your analysis skills. For more details, watch my other videos, subscribe, ask a question in the comments, or contact me via email. See you soon.